and this is your end of day recap for what it is today. I was going to say it's Tuesday. It is not Tuesday. It is Wednesday, December 6th. So I've got a couple concepts to go over in this video, so I will try to go through them very quickly. But first things first, risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. So I want to talk a little bit about, first of all, we have a big economic report that comes out on Friday. I kind of started the day this morning, as we do every morning for Tribeca members, is, talking about just the day ahead and something to be aware of, something, right? A trend. Look. We have a big economic report that's coming out on Friday, right? And it just seems like the market is just hesitating or waiting basically for where we're going to go to next in terms of new information that's going to kind of help provide some decisions for, let's say, institutions about what to do here. And I from time to time I hear that, geez, economic reports are not important, right? Because they're in the past, right? And stock prices are more important because they are a leading indicator. I agree with that to some extent. However, there's a lot of people that are making decisions based on what those economic reports are. So, for example, right? And if you don't think that this is true, I was trying to illustrate this earlier, but take, for example, what we did in November, right? And I think it's, if you look at a SPY chart, right? Do you think that we gapped up on this day and we're up 2% going back to 11/14 just for the hell of it, right? Just because things were looking good? No, it was because there was an inflation report. There was the CPI report that came in, and it came in less than expected. And the market gapped up and it continued to kind of move, but it was like a over 1% gap up that day. So yes, of course, right? These things are going to kind of move the market a bit, right? And it's the same thing with the previous jobs report a month ago. The market was up about 1% that day, right? And also on towards the end of last week too, when we got the PCE deflator. Now again, I'm not saying that all economic reports move the market that way. GDP, for example, we know is a very lagging indicator, right? If you've taken economics 101, right, and you have leading indicators, coincident indicators, and lagging indicators, GDP is a lagging indicator. I could care less, right? But for something like the employment report, right, where the Fed is going to be making a decision based on jobs, and the CPI report, if those things come out of consensus, the market is going to move. There's no doubt about it, right? And that's why I think what we're seeing right now is the market doesn't really want to move one way or another until we get this economic report that comes out on Friday. So again, why is that important? Right? Why is this job? Normally I don't care too much about I don't overemphasize the economic reports. I kind of, I believe too that prices do, to some extent, they want to go where they're going to go. But when we look at what we're going to get on Friday, and they're expecting 185,000 jobs, right? The reason why this is kind of important right now is because the expectations of rate cuts, in my opinion, have gotten ahead of themselves, right? We've heard from the Fed, the Fed right now is in a quiet period. We have a Fed meeting next week on Wednesday, right? And we know that we haven't heard Powell really say anything new, right? And I agree with him, by the way, right? He's kind of in the wait and see, right? They're going to see, there's no reason for them to change course just because they have like one CPI report that has come in flat, right? They want to make sure that, that the inflation rate gets back down to 2% and stays there. So I don't think that the fact that the market is now pricing in interest rate cuts for March and in June, I think is way ahead of itself. And that to me is when things don't align with what I think the Fed is trying to communicate. I think there could be an issue there, right? And that issue is that if the economic reports come out and they're not lining up with what the market is expecting, you might see a reconciliation of those two things, and that reconciliation means that the market might sell off based on, because right now it's the Fed. And by the way, what we're looking at is the Fed fund futures. This is what the Fed controls, right? They control the overnight rate. They don't control, like I sent somebody a tweet who I don't even know who it was yesterday, because they were saying, oh, it's interesting that the 1 or 2 year rate isn't moving based on what, what some of what's being expected. I'm like, yeah, well, because the Fed doesn't control the 1 or 2 rate. It doesn't control the 1 year rate. It doesn't control the Fed doesn't control the 10 year rate. It doesn't control the 20 year rate. It doesn't control the 30 year rate. It controls the overnight the shortest term interest rate out there, right? So that's what we're referring to. So when people look at TLT and they think that the Fed has something to do with that, that is completely incorrect, right? That's judged by supply and demand, right? But the overnight rate is what the Fed controls. So that's what we're referring to. And right now with that overnight rate, which is right around 5.3%, right? They are the Fed fund futures are pricing in that there's going to be cuts, but we don't have that confirmation at all from the Fed, and we will need to see more economics that are going to come out, and they're probably going to need to come in a little bit lighter than expected. All right, so that's a big explanation about that, but it's kind of my thought on why we're not going anywhere right now. Right. Rallies are getting faded and we're not really breaking down yet either. But I guess you can argue that maybe some areas of the market are starting to break down. So again, that number is 185 that they're looking for, and private payrolls. And then the other thing that will be important, again, I'm jumping ahead. This isn't tomorrow. This is Friday, but it's good to think about this, right? I always talk about that with traders, right? Think about what is next and try to prepare a little bit so that you're not kind of caught off guard, because that's what my plan was this morning. I had a couple trades that were working pretty decently this morning, and I sold. I sold into that strength. Now I was trimming my positions. I didn't sell my whole positions, but I had Pulte on, and I had a few other positions. We were just talking about GE in the room, which GE was nicely up on the day, right? So was a couple other positions. So, I took targets in those positions, and then a couple of them I took off at the end of the day. I'll get to that in a second. Let's go over the indices first, and then we'll talk about some of the price action. But yes, reversal days, right? So that's not easy to deal with. They're generally not fun days for me, because I'm not one of these people who are going to do like a ton of predicting, right? I make adjustments based on what the price action is telling me, right? And of course, just like I mentioned, selling a little bit into the open, and then adjusted to the market not being able to hold today's gains and closing right around the lows of the day. So yes, this is a rejection, right? Price was not ready to get back outside of the December value area. So again, that just means that we're more in a neutral period versus what we were doing back in November, right? So again, people could talk about seasonality. Yes, I know that the market on average goes up a lot more often in December than it goes down. However, that's nice to understand what seasonality is telling us, but you could also argue on the flip side that sentiment is pretty damn hot right now, right? We've had a decent move, right? And there's not a lot of bears left in this market. So there's not going to be a lot more short covering because a lot of that has been done already. And I think Friday was a big short covering day. We're still going to see some things here and there, perhaps respond to some of those things where there is short covering. But for now, right, and we're just, so I've reviewed this a little bit yet in yesterday's end of day video too, talking basically about the same thing, about how the market was going sideways. So yeah, it's a failure here, but we haven't broken the value area. Again, that level's 45.53. Now, this is the S&P, which is kind of neutral, because if you look at the Qs, right? They also had a failure today, and that was a failure of a break back into the value area for the week, which is essentially where we started the week. So again, this is more of a position of weakness, right? Below value for the week. And again, I spend some time on the 1 hour charts because you can actually, like, I do believe that you can kind of get a little bit of a feel of the direction, sometimes a little bit prior to what you could be looking at on the daily chart. Like, so for example, like price is underneath here, right? That's not a position of strength, right? And even if you just use this 200 period moving average, right? So notice that we got above here, like in the beginning of November, right? And we stayed above, all the way to the first of the month. But to open this week, we've ducked under here, right? We briefly did that last week. So we're starting to kind of roll over, right? If we can't, if there's another rejection in here, you can see how this moving average is starting to kind of roll over. So that's not the best sign that you have for the Qs. Now we're still kind of holding in that 20-day moving average. So all is not lost, right? And again, we're talking about the super short term. If you're a longer term trader, you could be thinking like, what the hell is he talking about with 1 hour charts? But I'm more of a kind of short term trader. Some of the swing trades that I have on are just a few days. Some of the swing trades that I have on are a couple weeks, and sometimes even longer than that, depending on how they're acting, right? But that's why I go over this type of a time frame. Small caps, the smalls were doing really well today. They were up, well over 1.5%, and they finished in the red today too. So kind of, hanging around this virgin point of control, which again is where a lot of volume previously occurred. So again, they're magnetic to some extent, right? There's that force that is kind of just bringing it there, right? And always the red lines are a battle between the buyers and sellers. We just know that there's a lot of volume here, which usually means that there's some overhead supply, right? And that is not, we don't have enough buyers to basically take this higher. Also note, if you look at the 1 hour, it's a similar situation. There was a 1 hour VPOC that was taken out last week, and we're just kind of hanging around there. So I unwound my IWM trade yesterday, and I kind of felt like, geez, maybe you didn't have to do that. But as I went over in yesterday's video, I just don't have a lot of conviction in the small caps. Some other areas I do have more conviction, but again, everybody's different. All right. A couple of the other areas. So right now, I think that based on where we kind of finished for the day, I made my adjustments and reduced risk a bit, right? And I think if you go into this channel, I don't mind showing trades every now and then, but I was long some Pulte, right? I mentioned GE, right? I actually took 2 targets in Pulte this morning because it was just such a nice move. And I mentioned I wanted to be a seller into strength today. Caterpillar, right? That was another, I was kind of had a decent amount of industrial exposure on. So I took targets in that one too. And you could see I took Caterpillar off around 11, again, just said, hey, this trade worked pretty well. Not huge profits in the trade, but profits are profits, especially if you think that the market might have a chance to revert back. I had a losing trade today. I had a day trade in AMD, which basically just went south. And it didn't look very good. I think that closed right around the lows of the day. Interesting what's going on with Nvidia, which I've talked about in a few of these videos, but it just seems like Nvidia is getting more and more competition, right? I don't know if anybody else realizes that too, right? But we've heard Microsoft wants to make their own chips. Now, of course, they're behind. Most of these companies are behind Nvidia, but there's a lot more competition, I think, they were so far ahead of everyone else with the with the AI chips. And now you have to question, I guess, whether there are companies that are catching up to them, right? And competition is not generally, all the competition that everybody wants to make these chips is not particularly a good thing. Notice again where that got rejected, right? Right where like the buy area is, or where, right where kind of a significant turn would be. So again, this is tricky stuff, right? This, when you have days like this, they're not easy. And what I try to go over with traders is like, sometimes there's going to be some days where they're just not easy. And you just have to understand and make adjustments and not get mad at the price action, not get upset, but just say, okay, well, that's a tricky day. understand that you're going to have those from time to time, right? 469.76 is that level that this needs to breach. I got an alert on this and I was kind of watching to see if Nvidia could turn the corner, but for now it can't. So it kind of goes back into this sideways range that Nvidia has been in for a while. Right. What else did I do today? I got out of this. I had a small builder trade on. I'm long that in another account, by the way, in the TTD trend portfolio. I got out of a couple other things, IoT, which was a name that I thought could have a, multi-day move, but that hasn't really materialized. So you adjust. AER looked beautiful in the beginning of the day, right? This was a name that I got long last week, right? But look at the candle, right? So unfortunately, and it hasn't lost the trend here, so it still might be okay. But I just thought there's too many things that are kind of moving to the downside, right? GE, right, which broke into the value area yesterday, but tried to go higher. Notice that it wasn't able to turn the corner. So that's it. You kind of just understand what the market is trying to tell you and make those adjustments. And it doesn't matter if your P&L is up or was up in the morning, right? Or and you're upset because you were up in the morning and now you're not. It's just part of the game, right? And the other thing that I always talk about is, one day is not a trend, right? And we don't know what we're going to get in terms of this month, after such a big move that we got in November and where the sentiment has now really shifted. So I don't think it's a bad, I actually don't think that it's really a bad thing if we get a couple shakeouts, right, before, the potential the so-called Santa Claus rally. Remember, again, the Santa Claus rally does not start now. The Santa Claus rally is only the last 5 trading days of the month and the first 2 of January. That's it, right? It doesn't happen before Christmas or Hanukkah or anything like that. So it's important to know, because people hear Santa Claus rally and they think, oh my God, we're going to rally all the way into Christmas. That's not what the Santa Claus rally is. So until then, you have to kind of really be on your toes about how you're, managing risk. And I will say this too, right? If you had a good month in November, a lot of traders did. I had a good month. The hard thing in trading is when the market starts to change a little bit, right? Let's go back to the Qs chart for a minute, right? If the market starts to change a little bit, right? And this does look different the last week or so comparatively to what we were dealing with in November, your job is to not give back the gains that you made in December, right? And to be a little bit more nimble as the market changes. All right. So again, if you had a bad day today on this reversal, it happens from time to time, right? Go out and go for a run, go for a walk, and then just get yourself to the place where you're back kind of analyzing the market as it comes at you rather than what you want to happen. All right, guys, that is it for today's recap. Have a great night. See you tomorrow.